Hello traders, Gary Wagner here, just around noon in Honolulu, 6 o'clock in New York. It is Wednesday, 16th day of May, 2018, and this is the Daily Report for gold and silver. It is the quiet after the storm being yesterday's dynamic sell-off, almost $30. Today, gold closed in essence unchanged, closing down about 20 cents at $12.90.10. 1638 in silver, that's a gain of 11 cents, and the dollar gained fractionally up 19 points at 93.28. A 62-point gain in the Dow at 24,768, and a 250-point decline in Bitcoin futures closing at 82.38 and 83.05 in the CME and CBOE futures exchanges. Yesterday's dramatic decline in gold pricing was a game changer and something unique that has not occurred the entire calendar year of 2018. We're all well aware of the fact that gold has been trading in a defined and narrow trading range with highs at about 1365 to 1370 and lows and major support coming in at around 1300. We can easily see that on 3 occasions this year, traders challenged the record top of last year, which sits around 1360 on 3 occasions. We are looking at a weekly candlestick chart. At the same time, we can see that on at least 2 occasions, both here and here, gold pricing challenged the support level at approximately $1,300 per ounce. This occurs, of course, after a defined rally began the trading year. This break below this price point was absolutely significant, and for the first time since the rally, which began at the end of last year into January of this year, did we actually see prices break below the support level. And interestingly enough, at the same time, what we saw was a move to the 0.618% retracement. The other interesting facet is that yesterday's trading activity took pricing below its 200-day moving average for the first time this calendar year. But it is the low that interests me the most because it comes in at a 0.618% retracement, and as any technical trader knows, it is an acceptable level for a rally, which is followed by a correction, and of course 0.618 is a deep correction before returning to rally mode, making a higher high than the previous high. And the reason I say that is since the end of 2015, beginning of 2017, there's been a distinct difference in price movement. And so traders, when we look at the end of the multi-year correction, and I've compressed the chart so that we can see that, we see the lowest low that gold had traded to since selling off from 1920, occurring at the end of 2015, beginning of 2016, when prices took the market to about 1040. From there, it traded to a high, which was just at around 1370, and this has been the brass ring that pricing has not been able to take out. But in terms of the lows, we can then see a series of lows that came in, and on each occasion, we have seen the market trade to a higher low. It has been this flat top that has held prices at bay. And traders, although history does not always repeat itself, I find an interesting correlation between the rally that occurred in July of last year and current pricing. And what I mean by that is as follows. We had a rally back in July of 2017 beginning at 1204 and taking pricing back up to this level of resistance at around 1360. At that point, the market corrected. In fact, it corrected to a retracement of 0.618 and had a series of lows that occurred at that level, creating very strong support. And at the same time, we saw a level of resistance, creating a narrow and defined trading range for the last part of the year. In December of last year, it broke below that particular price point and actually traded to a low of a 78% retracement here. That, of course, was the beginning of a dynamic rally, which started last year and concluded with the first of 3 attempts to breach the tops up at around 1365 and was the point in which gold pricing began to trade again in a narrowly defined range. The interesting thing is that in every occasion that we have seen gold pricing break below its 200-day moving average, both last year as well as the beginning of this year, end of last year, it has been very, very short-lived, and it has been followed by an extremely dynamic and strong rally, moving gold to dramatically higher pricing, which beckons the following question. This is the first occurrence of gold prices breaking below the 200-day moving average this calendar year. Will this occurrence follow the same pattern that we have seen in recent rallies, in which gold pricing breaks below its 200-day moving average and then quickly recovers and moves into a rally mode? And what I conclude from the observations we have just spoken about is that there are two ways that this scenario could play out. The first possibility is gold will find footing and support at the 0.618% retracement and begin to trade higher. If that is the fact, it would come up and at least challenge recent tops at around 1360 to 1370. If not, and prices do not hold, the most logical price point that gold would trade to would effectively be a 78% retracement. That comes in at 1267. It is also a Fibonacci harmonics coming in at 1264 from this data set that is derived from last year's major rally. In either case, there will be clear and decisive road signs that will indicate what our next move will be. We will first, of course, look to see if support comes in at this level and if initiating a long position makes sense, or if the current price level at 1288, the 0.618% retracement, does not hold, then we will probably see gold decline, and in terms of dollars, decline by about another $20 to 1267. In that case, the best advice would be to implement a short position in gold. In either case, this is a defined and critical area and will certainly guide our next trade. Traders, we had a slightly different take on today's show. Rather than looking at gold, silver, as well as Bitcoin, I really wanted to focus on gold because I see some unique similarities between activity last year and this year in terms of gold trading in a defined trading range, breaking to the downside, and that occurring just before a nice and dynamic rally, which followed. My question is, will history repeat itself, and can we look for that same scenario to play out? Only time will tell, but we have indicated our strategy in either case. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.